Okay, the next problem that we are going to do for Chapter 1 is actually on page 44. It's the problem series, and I assigned problem 1 2A, financial statements. And it reads, the assets and liabilities of Global Travel Agency on December 31st and its revenue and expenses for the year are as follows. And then what's important is to make sure you read the entire problem, because there's oftentimes information that's buried. And that's an example here. Common stock was $525. Retained earnings was $1,250,000 as of 1/1. During the year, additional common stock was issued, 50 grand, and dividends were paid, 90 grand. So this problem, it asks you to put together an income statement, statement of stockholders' equity, balance sheet. And what I would tell you is to remember there's always an order to putting together these financial statements. And it's exactly the order that the instructions are. You do the income statement first, you do the statement of stockholders' equity second, and then the balance sheet third, always. You do it in any other order and you're going to cause yourself a lot of pain and potential problems, but certainly a lot of pain. So again, this, like I said earlier, this chapter hits the ground hard. Right away they're asking you to put together some financial statements. So I'm not too concerned if you can put together the statement on your own right away. We will certainly look at this a whole lot more in future chapters, but it's the big picture concept. So the income statement, the very first one, what's in the income statement? Only our revenues and our expenses. So we listed out first our revenues, all of our expenses, and ultimately we want to get to a net income number or a net loss number, but that is the basis of the income statement, that net income. The second financial statement that we would do is the statement of retained earnings or the statement of stockholders' equity, either way you want to call that. And let's look at the total column, because I believe that's what we really want to focus on, the total column. What is the beginning total in our stockholders' equity, which would have been the summation of common stock and retained earnings, and then plus any issued of new stock, plus net income minus dividends. Going forward, certainly with privately held companies, you're not oftentimes going to see issuing of new common stock. Publicly traded, definitely. I mean, publicly traded, that common stock getting bought and sold is continuous. But a privately held company, many times they issue stock, and that's about it. Potentially when there's some transfer of ownership between siblings, or even it's a very closely held company, there might be some buying and selling, but the activity is very, very little. So 9 times out of 10, your retained earnings statement is going to always look like this. Beginning retained earnings plus net income minus dividends is ending retained earnings. And that's what we got here. Beginning plus net income minus dividends is your ending retained earnings. And what I want you to see is the order. See, we have a net income of $402,000, and notice here that is added to this financial statement. So we would not want to do this one first and then go back to here. We would need to do this one first in order to drop this net income into this statement. And then the last statement that we put together is the balance sheet, which is the listing of all of our assets and our liabilities and owner's equity. So we have our assets, and that equals the summation of our liabilities and our equity for our total liabilities and equity. So our assets equals our liabilities plus our owner's equity. And again, all of our assets, pretty straightforward, cash, land, you name it, all assets. We only have one liability, but notice here we are going to take our ending retained earnings and drop that in right here. So once again, there is a rhyme and a reason to this order. Income statement first, statement of stockholders' equity second, and then we put in our balance sheet numbers, our assets, our liabilities, and our two components of equity, common stock and our retained earnings. And let's take just a minute and talk about retained earnings. Retained earnings are earnings from previous years that are being retained that have not been dispersed. So earnings, revenues minus expenses that we've retained. Now how can we reduce the retained earnings? Right here, by paying dividends. So this retained earnings number is the net of whatever we incurred for revenues, less expenses, less any dividends that were paid. Retained earnings. You'd ask, who focuses on that number? Who looks at that number a lot? Your banker. Your banker wants to see what kind of retained earnings have you been managing. Have you paid everything out that you've earned? All your revenues minus your expenses, you get a net income of 1.5 million and you disperse 1.4 million. Well, you're not really retaining much of your earnings. That takes care of chapter 1. I would suggest that you look over these exercises again. Keep in mind that we will dive deeper into all of these concepts in the coming chapters, but it would be helpful to go through these again. Certainly review them on Cengage. It's a good way to solidify these concepts.